Hey guys, today I wanted to take a short moment and do a quick little video about the home equity line of credit. I get some questions about this a frequent amount because I mentioned it when I was on the Bigger Pockets podcast. So home equity line of credit, or a HELOC, is a very useful way to leverage money that you may already have and not even think about to purchase a property. There are some great strategies with the home equity line of credit, and there's one downside, or two. Stay tuned to find out. Welcome back, guys. If this is your first time joining us, click that little subscribe button. I didn't buy this pillow just for show. Subliminal messaging. If it's not, welcome back. We appreciate you being in the community. Hope you're learning something from this. Now, if you've ever used a home equity line of credit to purchase a real estate asset or just to save your skin, maybe you have it just as a way to buffer against the unforeseen. If you have ever taken out a HELOC, comment yes down below. If not, comment no so that I can gauge the audience and know if I need to do a more in-depth version of the home equity line of credit. The HELOC is super simple. Let's say Dave, maybe I should, whatever. Let's say Dave owns a $100,000 property and he's owned it for 10 years, and so he only owes $50,000 on the property. A home equity line of credit is where the bank will lend you money using your house as collateral. So I owe $50,000 on a $100,000 house. Most banks will loan around 70 to 80% loan to value. That means, say 80% loan to value, that on a $100,000 house, they would be willing to lend up to 80% of the value of that home. So $80,000. Now if I owe 50 and they'll lend up to 80, that means that I could take out a $30,000 home equity line of credit. Now the real cool thing here is that this is not a loan, it's a line of credit. So you open this line of credit for $30,000. Traditionally they have a 15 or 20 year payoff where by the 20-year mark it needs to be paid back to zero. You can just refinance, whatever. With a very competitive interest rate. Mine's in the 3%. Now it does fluctuate. It'll go up a little bit with the market, down a little bit with the market. So it is adjustable. It's not like a fixed 3% interest rate. But it's a much better interest rate than you will generally get on a property because you already own the property. It's maybe your primary residence. The bank feels safe lending you some money on it. So you get this $30,000 line of credit, and you want to know how much you pay on it every month? Anyone want to guess? Gonna put your little guess down there? No, you don't want to comment? Okay, I'll just tell you, zero. You don't make any payments until you use the money. That's right. So a line of credit is like the bank saying, hey, you've got $30,000 in this checking account and we're just gonna leave it there. And then when you use 1,000 of it, you need to start making payments to pay that 1,000 back off. You use 10,000 of it, you start making payments to pay that 10,000 off. If you use the 30,000, you need to start making payments to pay that 30,000 off. I was able to pull out a home equity line of credit for like $72,000 and go put $50,000 down on a property, and it counted as my down payment, which is awesome because it's money that wasn't even like I didn't have to waste time saving for it. We just been paying off on this house, and all of a sudden, voila! Now there are a couple things to be aware of. The interest rate, it can sneak up on you if you're not paying attention. Now, and also if you're not paying it off and that 20-year mark comes around, you're gonna get stuck paying it off. But there's one nice thing about that is like absolute worst case scenario, you have no way to pay off your home equity line of credit and it's coming due, you can sell your house and be good. As long as your house sells for enough to pay off the mortgage and the HELOC, no problem. If not, you just need to pay the difference. Now that may not be the ideal method, but it's nice to know that you can take this money out and the risk is very low. The risk is so low because the bank knows that if you default, you're gonna want a place to live. So you're gonna find a way to pay it back off. Otherwise they'll foreclose on your house. Now that's a downside, but the reality is you're never gonna let it get to that point because that's 20 years down the road and it's very easy to make these small payments and pay off your property by then. So a home equity line of credit is not an unlimited source of money. It's not a credit card to go buy shoes with, but it's a great tactical advantage in your investing repertoire for the disciplined investor. I wouldn't take out a HELOC if you're gonna go blow it on a car. Terrible use of funds. But if you're gonna take out a HELOC and then spend the money on something that's gonna bring money back in, that's not a bad investment and that might pay off very well. So be smart about it, but I hope this answers some of your questions about a HELOC. If there are more questions or you still don't fully understand the concept, Comment down below and let me know what those questions are, and I will post a much more detailed video on the home equity line of credit. I just don't really know how detailed I need to get, so let me know if you need more. If not, have a great day. Don't forget to subscribe, share the video, do a hula dance. This is probably one of my last videos ever filmed in Hawaii. It's sad. The Hawaiian shirts aren't going anywhere though. Have a great day.